Welcome to Markets Now. I'm Michelle. We're with Brad Kooima of Kooima Kooima Varilek here at CattleCon 2025. And we did see a higher day in the grains, but lower over in the cattle market once again. And Brad, let's talk about the correction that we're seeing. Is it just profit taking? Is it the Mexican border reopening, or where's the pressure coming from?
Well, I think it's coming in on a few angles, right? I think you're right. First of all, we're very overbought. We're at record high prices. So the market will get wobbly a lot easier when you're at those kind of levels. That just stands to reason. Thankfully, we're trading at a big discount to cash yet. But I think, you've got reopening of the Mexican border, and let's be realistic, it was bullish when it happened, so it's probably a little bit bearish when it reopens, right? You also have a little disappointing in the cash market, in my opinion, the way the North, the South had a great week last week, the North did not. But to me, the other thing that I continue to be worried about, and I think that's this uncertainty, and whether that's uncertainty that comes from varying policies from one moment to the next out of Washington, whether it's tariffs or whether it's the whole, what we're doing with rounding up the undocumented, the illegals, call them whatever you want to. But there is a fear out there a little bit, I think, about are we going to be able to maintain a reliable workforce? And that's my worry. And I don't want to overdo it, but I also don't want to, I really missed the beginning of COVID. I underestimated how important that was, and I don't want to miss this one either. So let's pay close attention. I think that's an issue. That's a big deal.
So we've got a reprieve on tariffs with Canada and Mexico for at least 30 days. But what else is there that could maybe get the funds heading for the door? What could spook them in this market?
Well, to give you a little perspective, that actually the tariffs with Canada particularly was bullish cattle.
Right.
Because we take 14,000 cattle a week fed slaughtered out of there. So, the fact that they're reopening explains it a bit too. What other things could do it? Well, for one thing, price action. I mean, we get back below some of these averages, we're a long way down. That's usually what spooks them. I would say if you had some kind of event that I can't predict, that would do it. But I actually think I would rather be on the side of the funds as against the funds. The funds have defended their position here. You got funds that also read the newspaper too. They know look at that last cattle inventory report. We got solid supply side fundamentals. I would think that the funds would have a tendency more to support the market on breaks. And we're due for a break. So I think this is a healthy correction like you started your question with.
Consumer demand has still stayed very strong, hasn't it?
The domestic consumer demand is not good. It is fantastic. And particularly for the grind. And it's very, very good. Now, middle meats are going to start to soften up. They always do the week of Super Bowl, right? And then we'll go to a little transitioning of a little bit of a different kind of a feature. But I still go back to the only good thing that I can think of that came out of COVID, Michelle, was that we moved the paradigm here from these whatever this Gen X, millennials, whatever these people are that figured out that, I can go to the grocery store, YouTube a video how to cook a steak.
Yeah.
I can do that 2 times a week, 3 times a week, cheaper than I can go out one night a week. And so that movement in domestic demand, I really think has carried the ball.
Last question on cattle. Where do you predict us going to? Because we're not even into the tightest numbers here yet.
You're right. We are not into the tightest numbers. I think the numbers in the first quarter are much tighter than they were in the fourth quarter. If it falls right, and this means we can't have a black swan type thing, I still think that we're going to test 220 in the cash. Now, with the way this futures market lags, what does that mean? We could be $10 to $8 behind in the futures. But I still think we've got a shot at doing that in the first quarter. And then we got to pay attention. Leverage is just such a fine line between not enough and too many. And if we lose leverage by not selling cattle on a timely basis, by the time we get into the summer when we have calves, it'll be different. But let's stay current. I like the way it feels here yet for a while, barring something unforeseen.
Grains reversed yesterday after we got the news that we were not going to have the Mexican tariffs in place for 30 days. But there's also been rumblings about a China deal. Is that why we saw follow through in the grains today?
I sure think the China thing probably trumped the rest of it, although you're absolutely right. Especially the corn thing. We sell a ton of corn. And you saw what happened in the hogs too. I mean, yesterday we were cratering. Today we just about got it all back because we're feeling better about our ability to maintain trade relations with Mexico. China is an integral trade partner though for us with soybean meal, etc. With them saying they'll go back to phase 1, honor the deal there, maybe move on to phase 2, that preliminary stuff that we were doing the last time we had Trump administration in force. I think that was probably psychologically friendly. Weather may be less than perfect in South America too, although I don't know, I still think South America is a bit of a bearish wild card. They planted a record. Generally, it's a big country. There's always going to be a spot where it isn't perfect. I'm more confident the corn's ability to rally than I am on the beans.
Yeah, but the funds are already very long in that corn market. What do they need as far as news or technicals to keep going?
You need to feed the bull, right? Put gas in the engine. We closed about $5 on the front end. That's probably enough for technical advance,
Right.
to give you some gas there.
525 maybe the next mark?
And I hate to be negative, Nally, but you must have some hedgers that watch this. I hope. If you get new crop corn at $4.80 to $5, I'd sure get started. And you get new crop beans at $10.80 and $11, I'd sure get started there too. Use this bounce to get something done.
Corn going to continue to pull wheat and soybeans along with, because soybeans got above that 200-day moving average finally today.
Surprised me. They outperformed my expectations on the beans for sure. And what had been going on is the wheat had been such an anchor that's holding the corn back now, like you just described. The corn seems to be dragging the wheat a little higher. Wheat's got a little issue though. There's plenty of world wheat. I don't see it running away, but there's so much news going on. It's just so difficult to react on a daily basis to what's going on.
Thanks so much. Brad Kooima with Kooima Kooima Varilek. That is Markets Now.